Good morning again, people. We are again back in our charts, and I just want to show you something here fascinating. This is a live trade, and it's still running. It's a trade I took yesterday, and I had projected that it have to take 2 days to reach our objective. So the projections were done from a minute 15 time frame. Let us just go to a minute 15 time frame so that you can see. This was what happened, and as you can see, the stop trade happened. The day opened here, by the way, on 12:00, and a stop hand happened. Then we displaced to the lower, breaking the structure. Let us just put it here. We broke the structure to the downside. So these things, as I told you earlier, what happens on a 1 minute time frame, one day you'll just see it happening on a 15 minute time frame, or a 4 time frame, and as we go on. So we experience a break of structure on a 15 minutes time frame, and a swing high. This was the market structure shift. This one, market structure shift. So your first shot was here. You could have sold this market here, and if you just see it carefully, we just sold the market at our kill zone. I just see. As you can see, Sambili, we had a retracement back to take out the buy side liquidity before we had our move now. The market structure shift, the break of structure. We are trading a candlestick. This is a candlestick we are trading, and we are trading a weekly candlestick. Prices have retraced back the 50% of our week's ranges. We have been bearish all through, but now prices have retraced. You will have to go on your own chart so that you can see what I'm trying to explain to you here. Because you know, some people just want to be fed information, every little thing they want to be fed. They don't want to put in effort. They don't want to work for themselves. They want easy things. So you'll have to go back to your charts to see, to identify the market structure before the initial big run of our weekly ranges, the high of the week and the low of the week. You will see that the whole of this move here is a retracement. The whole of this move here is a retracement back to the 50% of our weekly range now, our dealing range. So the red line just above here is the weekly open, and you can see the resistance is too high, yani the resistance is too high. So after knowing where our weekly open is and how the prices are being resisted, the stop trade here will just give you enough intel to tell you that prices are generally very weak, are just about to explode to the downside. So the market, the energetic movement, this strategic energetic movement here, this is a displacement to the downside, as you can see evidently. This is a displacement, and this consecutively up close candles here, 1, 2, 3. This is a bearish order block. This one, it's a bearish order block. I want to teach you this thing once and for all. I don't want you to be hopping here and there, trying to be looking for the last piece of ICT. No. It's just with the fight is just within yourself. You just have to work for it, my friend. There is no shortcuts, and we have to also be patient and wait for the market structure to form. This kind of market structures. So we have broken the structure to the downside. Evidently enough, the structure has been broken after our order block pushed the prices to break the structure. A retracement back. These are 4-hour candlestick opening. So you have to understand how the psychology behind the formation of each and every candlestick. So we retraced back above the 50% and took out buy side liquidity. That's the best case scenario. So we have taken buy side liquidity. There is a fair value gap there, and there is a bearish a bearish breaker block. Breaker blocks also just act as order blocks. Just that what you will have to know from today. Breaker blocks also work the same way as order blocks. So this is a breaker block and it's also a bearish order block, as you can see. So the prices are mitigating. The prices are above 50%. Best case scenario, prices are above 50%, and we have taken buy side liquidity. As I told you and I've taught you for a while on how to place your stop loss. Your stop loss is the 25% of this range from 0 to 25. The upper quadrant, 25% of the upper quadrant is where we place our stop loss. Our first take profit, you'll have to determine it by placing on this swing loss. You can, these are sell side liquidity. You can pay yourself below here. You have got this is also a low resistance liquidity run over here, and as you can see, you can also pay yourself once we break this kind of thing in the marketplace. And you can see this is where you could have paid yourself exactly here. You could have paid yourself there. And the system now, the model is telling us that we are just about to hit 161.8. These are live trade folks, and I will show you the results. I will attach the results with this video so that you can understand. Our first target is 161.8. That's our first target based on the projections on this displacement, on the market structure. This is the system. This is a model. This is an ATM machine that I've been showing you all through. And you cannot deny the fact that it's just the same thing I've been showing you, just repeating over and over again in each and every time frame. So I will have to remove this line and go back to the 5 minutes time frame. Wow. So this is the 5 minutes time frame, and as you can see, the day opened at 0.00 and left on our kill zone. Our kill zone started at 2. At 2 o'clock, after every 2 hours of each session, it's our kill zone. And you can see our kill zones, we opened and just ran for liquidity, raided the stops above here. If something like this happens, then you can be a seller up there. These are short. These are obvious short, and there's also a resistance point there, a daily open. So it's highly, that's a setup on its own. That's a setup on its own. That's why I tell you there are very many setups in the market, very many setups, and you don't need to be in the market all day long for you to find them. Because let's say you are in the market at 2 o'clock here, you could have taken this one and just paid yourself about here and maybe go on with your daily programs. Or maybe you are not there at that period of time, you can come back again at 8 o'clock. That's another kill zone we are opening, and you read the price to determine where we are headed to. As you can see, the market structure that's presenting itself here just show you clearly that it's a retracement to take out the buy stop that we are resting here and retrace about 50% so that you can gain more momentum to drop down to take the consequent discount arrays that are present down here. So let's move these lines. You know, I'm going quick and you'll have to follow up, because what I'm teaching you is what is happening in these markets on a day-to-day basis, and I'm also showing you live trades and the exit points and how to place your stop loss. So these kinds of lessons are very important, and I understand that there are just some people who don't listen. There are some people who think that everything that is given for free, they think it's a joke. Let me tell you guys, these are kind of the opportunities that you don't have to let them slip by, because this is a golden opportunity. I've just stripped down this thing in a way that even a class 2 dropout, a standard 8 dropout can understand everything that I'm explaining. I have made it simple enough so that people could just find themselves doing this thing with the love. Because let me tell you, it does happen every single day. It's just upon you to be on the market at specific times of days and to be able to identify these kinds of setups and take them without hesitation, because once you see them, they don't happen easily. Also, they happen based on the market structure at hand. So once they happen, you have to take them without apologies, because success, if it comes, you don't have to apologize for it. You just have to, how we took here. We sold four contracts there, and we just want to explain to you how to manage your emotions and to manage the trades, and to identify if the trades are working on your favor or not, because those are some of the lessons that no book will teach you. There is no book that will teach you how to manage a trade, or how to manage your emotions while on a trade, and how to identify if the trade is still valid, how to know if your setup is still valid, and how to know if it is failing or it's working on your favor. Those are some of the things that you'll have to be very keen to understand them, and you'll have to also be very focused and to do your own research to be able to know. So the downtrend is just obvious, and as you can see, evident enough, our shorts was taken, and it was taken on our kill zone. It was not a guesswork. It was on the algorithm had started working, and that's why we took the shots. Let us go to the 2 minutes time frame so that we can now analyze this thing one by one. These are 2 minutes time frame, and as you can see, there are very many trades. These are our initial trades, and you can see the prices are not going in a straight line. You can see it was just profitable at first, because these move alone from here to here can pay your rent just from here to here. That might be a monthly salary to someone just from here to here. I'm telling you the truth. And a retracement above 20 is where our kill zone opens. 20 is where our kill zone opens. And I just want to show you something here very magical. And if you're not keen, you'll just think that prices are jagged and are sloppy, and you can't get yourself through them. So you'll wait to buy low, and that's to sell low, and that's the most of the, and that's very bad, quite unfortunate. As you can see, we opened on 20s on our kill zone, and the market structure that is presenting itself here is obviously showing you that we have broken the soil to the upwards, and we are trying to retrace and get a hold of the buy side liquidity, the internal range liquidity resting above there. As you can see, there was a market structure shift. There are very many setups, and I'm just showing you how you can get them. So these are market structure shift, and you can buy on this propulsion block. This one is a propulsion block. This one is a propulsion block. You can buy on this propulsion block, and you can wait for a break of structure again here. This is a break of structure. This is a break of structure, so you can buy the retracements. And these are 4-hour open. You also have to understand the market, the formation of the psychology behind the formations. So we head to run buy side, and energetically, this is not something anemic. We ran buy side energetically, taking out the stops that were here, found resistance. These are now some things that this is when you must be writing something down. This line here is the 12-hour open, our third. This was our third quarter open, and this is where prices are left energetically to the downside. This line here, this candlestick here, this bigger move here, the one you are seeing here, the all of this from here to here. Do you really know these are order block? I don't know if you are seeing it. These are bearish blacker block, and I don't know how I can explain to you so that you can understand. I just know some people are not getting it. It's like I'm talking to myself, because these things are complex. people are not getting anything. Just so this is the breaker block, the bearish breaker block, and the resistance, that the kind of resistance that is here is enough and evident to show you that we are bearish, and we are taking consequently buy side liquidity as we go down. Buy side taken, went down. Buy side taken. There is a 4-hour open here and a third quarter open. Very sensitive areas, and also a 4-hour open. Very sensitive areas. And there's an order blow. And an inverted fair value gap. This is an inverted fair value gap. If you just, if I can lengthen it, so that people can see, some people. I don't know. Kenyans are very ignorant. I don't know if it's just Kenyans, but people generally are very ignorant, and they just hate learning new things. They hate learning, especially from people they don't value. Like, for example, if you think I'm a scam, if you think I cannot teach you anything, if you think you're above me, if you think I don't know anything and I cannot tell you anything, I just urge you to go and prove me wrong. Just go and try finding these things on your own charts. One day you'll tell me that I helped you. You'll just show up and tell me that I really helped you, and I am the reason behind all your fortunes. I know people are now ignorant, and they are behaving as if I'm wasting time. They don't want to even watch a video up to the end. They think it's boring. If you want easy stuffs, then just create them for yourself. These are one of the easiest things that I've created for myself. It seems hard when I'm explaining them to you, but when I'm on my own charts, I just you just relax and let us go to the 1 minute time frame so that you can define this setup over here. So on the 1 minute time frame, it now looks clear, and you can see the break of structure and everything happening in real time. You can see the fair value after the break of structure and the upper move. You can see evidently nothing hidden. And let us move this one. This is a live trend, folks. So as you can see, after mitigating the Q3 open and the order block, the bearish breaker block, you can evidently see how we displaced lower, creating a